buzzing around in the last few minutes. We have V8 Wabag. The order inflow of the company came in this morning. They had an order of almost around 260 odd crores. So that stock is up around 11.5 odd percent. Godfrey Phillips is the other one, which is up 6%, has been buzzing around for a couple of months as well. Godfrey Phillips, in fact, this year is up 84 odd percent. But let's talk about stocks which are not doing too well. And it's a muted debut for Uniparts India on the bourses. Stock slides after listing at a slight discount to the issue price. We do have with us Gurdeep Soni, who is the chairman and MD of Uniparts. Gurdeep, thank you for joining in. Welcome to the stock markets as well. Not particularly great listing, somber, but let's see over the long term how you do generate wealth for your shareholders, etc. Before we talk about the business, what was interesting is that while IPO holders may be sitting on a bit of a discount to their issue price right now, one of the promoter entities, Jaswinder Singh Bhogal, was allotted about 1 lakh shares in 2022 itself at around 52.5 odd rupees. And that itself would amount to, within 10 months, a jump of almost 10x in valuations as per the IPO. Just wanted to understand what went down there.
Actually, we have, well, to start with, thank you for having me on your show. But on that particular question, we actually, Mr. Bhogal works for the company. He's been working for many years, and so have the key management that we have. And we have an ESOP plan, and in the ESOP plan that was set up several years ago, the shares were issued at 52 rupees 50 paisa to the key management people. So really, this was done many years ago, and that's what the reason is, that he has that share at that particular price.
The price was decided many years ago, is what you're saying. Is that so?
Correct.
But the allotment happened just 10 months ago, so which is why it was interesting to look at.
Well, the reason is that, like I said, this was under the ESOP plan, and some of the shareholders exercise the right to apply for the shares depending on the longevity of their tenure with the company. And Mr. Bhogal and in fact some other shareholders even before him exercised their rights, and that's the reason they got it at that particular price.
Okay. All right, Mr. Soni, so that is about this particular allotment that was made. Let's talk business now, because earlier we could not ask you to give us forward-looking statements or ask specific numbers, but wanted to understand how Q3 has been so far for you. We are towards the end as well, especially North America, because you get around 47% of revenues coming in from America. How is the situation on ground, and what does this mean for growth in FY23 and FY24?
Great. So, I have the audited numbers for the first quarter. We had a top line of 348 crores with an EBITDA of 76 crores and a PAT of 50.5 crores. And clearly moving forward, right up till now, we are looking at being maintained and should be maintained for the rest of the year as well, And talking about the US, even though there is talk about high interest rates leading to any kind of recession, but the two industry segments that we are in, which is agricultural machinery and construction machinery, both are very robust. In fact, the largest corporation in the world for construction and the largest in the world for agriculture, both are our customers. And in the recent statements about 3 to 4 weeks ago, both have mentioned that 2023 is going to be one of their highest years. And in fact, they do not expect they in fact expect the peak to be till 2025, 2026, So we at Uniparts are looking at some very robust growth in the near future and in the next 3 to 4 years as well.
All right, it will be interesting to see that, because, the last few years you have compounded at around 16%. It will be interesting to see whether robust means outperforming that or maybe just meeting that itself. One more thing, Mr. Soni, you said that US and Europe farmers have had max income in the last 5 years and they're looking to replace their equipment. So could you give us a sense of what the average age of fleet in the US and Europe is right now, and what is the average replacement cycle there?
So normally the average replacement cycle is 7 to 8 years, but what happened was that the 2 COVID years, the average replacement, as we call it, could not take place, and industry is talking about almost a 1-year backlog on replacement. So that, plus, as you mentioned very correctly, that because of high prices of food commodities, the farmers, in fact, have some of the highest income in the last 5 years. In addition to that, in fact, our customers are also talking about that the dealer inventories are practically non-existent, and for most machines, they have a 3 to 6 month wait, So all of these are really pointing towards a very robust growth for these two particular industrial segments.
So, Mr. Soni, in that case, the 16% CAGR that you've seen in last 2 years, will you be able to do better than that since you're talking about order backlogs as well? And margins at 22%, is it maintainable, or will you do better than that as well, because you are talking about more orders and better demand coming in?
Absolutely, and really we expect the margins to be maintained at that level because everything that the company did to come to these margins is behind us, and margins are clearly sustainable, primarily because we compete with made in USA and made in Europe and made in Japan, whereas Uniparts is the only company that is in a low-cost country with a delivery model which is offering supplies to its major customers free of risk, And so that allows us to have the margins that we are having at this point in time. We also expect growth to continue at a fairly good pace because of the China plus one thing. While the industry will grow at its 7 to 8% growth that has been talked about by Crystal, but the China plus one is really playing out very well for India and for Uniparts in particular, and we are getting a lot more business opportunities actually coming and executing orders because of the shift of business from China to India.
A quick one before we let you go, Mr. Soni. You have around 87% revenues coming in from exports, 13% from domestic. And if you could give us a sense of going forward, what will this revenue mix look like? And at the same time, what would the revenue mix between your 3PL and PMP segments look like as well?
Right. So as far as the domestic is concerned, last year was about 13%. And in the last 4 to 5 years, this has just fluctuated between 13 to 17%. Moving forward, we expect that range to be maintained. Clearly, the demand globally is far more greater than what it is in India, although I won't say that India is lagging any behind, So we expect that percentage to continue in terms of the mix of the product, Again, on the second question, on the 3-point linkage, which is associated with the agricultural machinery, we had a 55% top line from this particular segment and 37% from the segment of construction machinery.
Okay. All right, Mr. Soni, it was a pleasure speaking with you. Thank you so much for joining us, and good luck for the future plans, and welcome to stock markets as well. With that, we'll slip into a short break. We'll connect with Srinivas Reddy, who's the MD at MTAR Technologies. His company has signed an MOU with Indian National Space Promotion and Authorization Center. Stay tuned.